Hello, and welcome back to Boni's Life, the channel where we navigate the electrifying and sometimes slightly chaotic world of cryptocurrency with a bit of wit and a whole lot of data. What a week it has been. If you blinked, you might have missed Bitcoin packing its bags and moving to a new, very upscale neighborhood above $125,000. That's right, we have a new all-time high. So, what does this mean for us? Is this the beginning of the next great bull run? Or is the market just having a sugar rush? In today's episode, we're going to dissect the past week's explosive price action with some deep technical analysis. Then, we'll zoom out to look at the big picture, the fundamental drivers, the institutional giants making multi-million-dollar bets, and the global economic events that could send ripples through the market. We'll also give you a calendar of the key crypto events to watch in the coming week, and most importantly, we'll wrap it all up with some actionable trading strategies to help you navigate the week ahead, whether you're a seasoned pro or just starting to dip your toes in the crypto waters. So grab your coffee, get comfortable, and let's make sense of the markets together. All right, let's get technical. Looking at the weekly charts is like reading the market's diary, and this week, it's been writing in all caps. Bitcoin didn't just knock on the door of its previous all-time high. It kicked the door down, said, "I'm home," and started redecorating. The weekly chart for Bitcoin is screaming strong buy. And when I say screaming, I mean 16 of the most popular technical indicators are in a bullish chorus with only one lone voice suggesting a pause. All our key moving averages, the 10, 20, 50, 100, and 200 week, are stacked in a perfect bullish formation, with the price action soaring comfortably above them. This is the kind of textbook uptrend that traders dream of. It's a powerful confirmation that the momentum is real and sustained. Now, for those of you worried that we've gone up too fast, too soon, here's the interesting part. The oscillators, which measure the momentum of the price move, are largely neutral. This is fantastic news. It suggests that while the rally has been powerful, the market isn't yet in what we'd call nosebleed overbought territory. There's still fuel in the tank for this rally to continue. And what about Ethereum? Well, ETH is playing a beautiful game of follow the leader with a stunning 17% rally this past week. Its technical posture is a mirror image of Bitcoin's, a strong buy signal with the moving averages in a firm uptrend and the oscillators remaining neutral. This tells us the bullish sentiment is broad-based and not just a Bitcoin-specific phenomenon. The entire crypto market has been lifted by this tide, with the total market capitalization now standing at a staggering $4.27 trillion. The path of least resistance for now is clearly upwards. So, what's the fuel for this rocket ship? It's not just retail enthusiasm this time. The big money is here, and they've brought their checkbooks. We're seeing a massive wave of institutional adoption, and the numbers are staggering. In just 1 week, Bitcoin and Ethereum ETFs saw a combined inflow of $4.5 billion. BlackRock's Bitcoin ETF alone pulled in $1.8 billion. This isn't just a trickle. It's a flood of institutional capital that is fundamentally changing the market structure. And the giants of Wall Street are taking notice. JP Morgan, a firm that was once famously skeptical of Bitcoin, has put a price target of $165,000 on it by the end of this year. Their reasoning? Bitcoin is still undervalued compared to gold. Citigroup is projecting a target of $133,000, and the ever-bullish Standard Chartered is calling for a jaw-dropping $200,000 Bitcoin by December. Even the AI models are getting in on the action, with a consensus prediction pointing to a Bitcoin price in the range of $140,000 to $160,000 by year-end. When the banks and the bots agree, it's probably a good idea to pay attention. But it's not all sunshine and rainbows. We have to keep an eye on the broader global economic landscape. This coming week, we have the annual meetings of the IMF and the World Bank, and a G20 finance and central bank ministerial meeting. These are the gatherings where the architects of the global financial system discuss the state of the world economy. Any pronouncements on inflation, economic growth, or monetary policy from these meetings could have a significant impact on all markets, including crypto. We'll be listening closely for any hints about the future direction of interest rates and global liquidity. Now, let's drill down into the crypto-specific events for the week of October 6th to October 12th. On Monday, October 6th, we have a couple of infrastructure-related events. Kronos is shutting down its old Kronoscan, and Shaden Network is undergoing an upgrade. These are generally positive developments, showing that the projects are actively building and improving. On Tuesday, we have some community-focused events from Star Atlas and Mantra. The event that's really on my radar is on Thursday, October 10th. Linear, a popular Layer 2 scaling solution for Ethereum, is unlocking 1.08 billion tokens. That's a massive 6.57% of its total supply being released into the market at once. This is a significant event that could lead to increased volatility for the Linear token. If you're holding or trading Linear, this is a day to be extra vigilant. Such a large unlock can create selling pressure, so it will be crucial to watch the price action around this event. So how do we trade this market? With Bitcoin at an all-time high, the strategy is not to chase the green candles. We need to be smart and patient. For Bitcoin, the trend is your friend. Look for opportunities to buy on dips. Any pullback to the $120,000 to $122,000 range could be a good entry point for a long position. Set your stop losses below this zone to manage your risk. With the institutional forecasts we've seen, a price target of $130,000 and beyond is not unreasonable for the coming weeks. For Ethereum, it's a similar story. It's currently trading around $4,600. The previous resistance around $4,500 should now act as support. A dip to this level could be a buying opportunity. Ethereum has a tendency to lag Bitcoin initially and then play catch-up in a big way. If Bitcoin continues to consolidate its gains, we could see Ethereum make a run for its own all-time high. For beginners, the best strategy in a market like this is often the simplest: dollar cost averaging. Continue to invest a fixed amount regularly, regardless of the price. This takes the emotion out of investing and allows you to build a position over time. For more advanced traders, the volatility around the all-time high offers opportunities for swing trading. Look for clear breaks of support or resistance on the lower time frames to enter and exit trades, but always, and I mean always, manage your risk. In a bull market, the biggest risk is not taking profits and getting caught in a sudden correction. So there you have it. The crypto market is in a full-blown bull run, driven by a perfect storm of technical strength, fundamental adoption, and institutional FOMO. The week ahead is packed with important events that could add more fuel to the fire, but also introduce some volatility. Our strategy is to stay with the trend, be patient with our entries, and be disciplined with our risk management. It's an exciting time to be in the crypto space, but it's also a time for a clear head and a steady hand. What are your thoughts on the market? Do you think Bitcoin will hit $200,000 this year? Let me know in the comments below. And if you found this analysis helpful, do me a favor and hit that like button, subscribe to Boni's Life, and ring that notification bell so you don't miss our next episode. Until then, trade smart, stay safe, and I'll see you next week.